Hi, my name is Sid from KOSEC Kodari Securities, and today we will be going through the Williams Alligator Technical Indicator. Now, this is a technical indicator that a lot of professional investors use to spot and confirm market trends.
All information given is general in nature and does not take into account your personal needs or objectives. For further information, please do visit our website www.kosec.com.au. So in this presentation, I'll be walking you through what is the Williams Alligator Indicator, the components that make up the Williams Alligator Indicator, and how to use the Williams Alligator Indicator, and one or two examples on what it looks like on charts. The Williams Alligator Indicator was created by trader Bill Williams, who was also an author of books on trading psychology and technical analysis in trading the stock, forex, and commodity markets. He stated that financial markets and individual securities trend just 15 to 30% of the time, while it goes through sideways ranges the other 70 to 85% of the time. So he created a technical tool to be able to confirm ongoing trends and their direction. So what is the Williams Alligator Indicator made up of? The indicator uses three smooth moving averages set at 5, 8, and 13 periods, which are also Fibonacci numbers. Now, the slowest moving average is the jaw, which is set to 13 periods and displaced into the future by 8 periods. The middle moving average is the teeth, which is set to 8 periods and displaced into the future by 5 periods. And lastly, the fastest moving average is the lips, which is set to 5 periods and displaced into the future by 3 periods. So here's how the Williams Alligator Indicator would look like on a candlestick chart. The green line represents the fastest moving average, which is the lips. The red line or the middle line represents the middle moving average, which is the teeth. And the blue line would be the slowest moving average, which is the jaw. Now moving on to how to use the Williams Alligator Indicator. The Williams Alligator Indicator shows us three key pieces of information, which are the absence of a trend, the formation of a trend, and the direction of a trend. Now I will go through each one of these points and then show how all of them look on a chart after I individually go through these points. Now starting with the absence of a trend. Now the absence of a trend is displayed when the three moving average lines of the Williams Alligator Indicator are extremely close together or are intersecting with each other. This is generally a time of low volatility, and the absence of a trend in the market is basically known as a sleeping alligator, which sounds kind of funny, but it means at some point the alligator will wake up, and when it does, the longer that it has been asleep, the hungrier it will be. So in layman's terms, the more evident the trend will be, and the stronger the breakout will be. Now, moving on to the formation of a trend. The formation of a trend is displayed by a successful crossover of the lips, which is the green line or the fastest moving average, through the other two lines, which is the other slower moving averages. This should be followed by the slower moving averages, being the teeth and the jaws, following the direction of the lips. Now, as an entry point, many traders will enter the stock or the market following a candle close above all three lines. Likewise, traders will exit a stock following a candle close below all three lines. Once again, I will show you this on a chart fairly soon. Now, the last key piece of information that the Williams Alligator Indicator shows us is the direction of the trend. Now, the direction of a trend is indicated by the movement of the two slower moving averages, being the teeth and the jaw. As mentioned earlier, the lips or the green moving average is the fastest and will move first. And then the red and the blue moving averages, which is the two slower ones, will follow the green one. Therefore, if the lips crosses above the two slower moving averages, it is a buy signal. And if the other two slower moving averages, being the teeth and the jaw, follow the direction of the lips and start to widen or diverge, that confirms the uptrend. Likewise, if the lips crosses below the two slower moving averages, it is a sell signal. And if the other two slower moving averages move down with the lips and diverge in that direction, then it confirms the downtrend. So as I mentioned earlier, here is all those three key pieces of information on a chart. Now this is a chart of APA group, ASX code APA, which shows, as I mentioned, all three pieces of information shown by the Williams Alligator Indicator. Starting at this purple box here, this displays an absence of a trend. As you can see, all three moving averages are very close to each other and keep intersecting. Then you can see here that this is a point where the candle opened and closed below all three lines, and the fast moving average has crossed the two slower moving averages. this would be a sell signal. And as you can see, the lines start to move down and diverge, which confirms the downtrend. And similarly, this green box here is pointing to this area right here, which is pointing to a buy signal where the candle has closed above all the three lines. And then soon after, the trend is confirmed by the fast line crossing over the two slower lines, and then the two slower lines following in that same direction. So as you can see, if you sold around this point, you would have saved yourself all this loss. And if you bought around this point somewhere here, you could have made quite a few gains. This is another example of how you can use the Williams Alligator indicator. Now, this is a chart of Oz Minerals Limited. ASX code is OZL. Now, this first purple line here is indicating when the stock has actually closed below the Williams Alligator indicator. So there's 2 points here. Obviously, the first one closes below the Williams Alligator indicator, but the Williams Alligator indicator here, you see there hasn't been any crosses around that same time here. But over in that second space right here where that purple line is indicating, not only has it crossed below the Williams Alligator lines, but it's also gone below the 200-day moving average. And then you can see there is a cross forming at that same point. So quite a few indications of a sell. And this could potentially be a point where you could have sold the stock. Now, obviously it has gone up a bit after that, but as you can see, if you did sell at this point, then you would have saved yourself all of this. Similarly, there's a couple buy points right about here. So this first line right here, the candle has actually managed to open and close above all three lines of the Williams Alligator indicator. But if you look here, the Williams Alligator indicator, the fast moving average hasn't really crossed yet. So if you would like to wait for a bit more of a confirmation, around that second vertical line right here, you can see that not only has the Williams Alligator, the fast line of the Williams Alligator indicator crossed both the slower lines, but it's also start to open up and the gap between the lines has start to widen. So this would be a bit of a confirmation of that uptrend. Now, obviously, as you can see, if you had picked it up here and rode it all the way up, all the way there, you would have made quite a bit of gains. So this is another example of how you can use the Williams Alligator indicator.
So in this presentation, we went through what the Williams Alligator Technical Indicator is and how to use it. I hope you found this presentation helpful. It has been brought to you by KOSEC, Kodari Securities. Thank you and have a nice day.